Jensen Huang is going to give the Computex keynote speech, and it's going to come Sunday night. Now, I'm hearing there's going to be some dazzling new products and ideas. This speech will be online, streamed at 11 p.m. Eastern. Now, I can't figure out whether to watch it live or the moment I get up, but I won't dare to come to work without knowing what Jensen is saying. Now, we know NVIDIA stock rallied 16% this week and is now safely back above the $3 trillion in market cap number. That's the beneficiary of a huge bevy of orders from the Gulf monarchies. By the way, they have a lot more CoreWeave than we thought, and that stock took off today. Now, I wouldn't be surprised if NVIDIA has more room to run, particularly because there are a lot of people who felt that it should never have been at $3 trillion in the first place, and they've been proven wrong.
Following a series of long-term sales agreements during President Donald Trump's trip to the Middle East, which came after a tariff detente between the U.S. and China, and an earnings season that revealed NVIDIA's largest clients are still well ahead of schedule on capital spending related to artificial intelligence infrastructure, where the chipmaker dominates, the stock is on track for its best month in a year. After several months in the wilderness, NVIDIA shares have found their way back as trade tensions with China ease, new chip buyers emerge, and doubts about big tech spending fade. This season demonstrated that the hyperscalers are still raising their projected expenditures, with NVIDIA continuing to be the leading recipient of that capital expenditure. I don't know why they expect the party to stop, but everyone wants to get off the train before it does, said Robert Ruggiero, Chief Investment Officer of Brave Eagle Wealth Management. The stock has now risen 43% from an April low, and is less than 6% from where it closed on January 24th, the day before the launch of DeepSeek's R1 model sparked fears that cheaper AI development would hurt sales, sending NVIDIA and other technology stocks plummeting. Since the beginning of the month, NVIDIA has surpassed both its 200-day and 50-day moving averages, which are encouraging technical indicators for the company's short and long-term momentum. Since its April low, the rally has increased its market capitalization by around $1 trillion, putting it ahead of Apple Inc. With $3.29 trillion, NVIDIA is currently the second largest stock in the world, behind Microsoft Corp., which has $3.37 trillion. NVIDIA's most recent surge represents a sharp recovery from the stock's largest decline since 2022. Amid worries that big tech's chip buying spree was about to slow down and that trade tensions between the U.S. and China threatened a crucial market, the chipmaker's shares had dropped 37% from their January peak at their lowest point last month. Tech giants increased the stakes rather than retreating. On the strength of demand, tailwinds connected to AI, Meta Platforms increased its capital expenditure plan, while Microsoft and Alphabet promised to spend even more the next year. According to the average of analyst forecasts compiled by Bloomberg, capital expenditures for the four companies, including Amazon.com, are expected to reach almost $330 billion in 2026, up 6% from estimated spending this year. Wall Street has been buoyed by fresh business opportunities in the Middle East, even though there is still a chance that U.S. trade policy would change negatively with relation to China. On Wednesday, Bank of America reaffirmed its buy recommendation for NVIDIA and increased its price objective from $150 to $160. According to analyst Vivek Arya, the Saudi Arabian infrastructure project commitments announced this week may bring in up to $5 billion a year for NVIDIA and rival Advanced Micro Devices Inc. and help make up for missed revenues caused by China's ban on chip exports. With 87% of the analysts Bloomberg tracks recommending a buy and the company trading 20% below the average analyst price target, Wall Street is still nearly unanimously favorable on the stock. It has the second highest predicted return among the Magnificent Seven stocks, after Alphabet. Although NVIDIA's share price has recovered from being the lowest in relation to projected earnings since 2019, it is still below the long-term average. According to Bloomberg Intelligence, NVIDIA is expected to grow revenue 54% in its 2026 fiscal year, which ends at the end of January. The company is scheduled to report its next batch of earnings after the market close on May 28th. Based on statistics provided by Bloomberg, the shares are currently priced at 28 times, compared to an average of around 35 times over the last 10 years, after briefly trading below 20 times earnings projected over the next 12 months. The S&P 500 index carries a multiple of 21.6. Owning the kind of growth that NVIDIA provides typically comes at a price, but the valuation isn't far from multi-year lows or the market as a whole, which shows how appealing the investment profile is, according to Andre Bakos, president of Ingenium Analytics. The stock's technical strength, valuation, and growth potential are all now working in NVIDIA's favor, particularly with the addition of additional Middle Eastern markets. That just serves to highlight how difficult it is to reverse a trend when the underlying principles are so strong. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now let's dive into today's video.
NVIDIA, and folks are so excited because they saw NVIDIA go down below $100, and they, obviously questioned what's next and felt like doomsday was here, only to see it run back up now, and it's at 133. There's also another story about NVIDIA when it comes to AI and Saudi Arabia and deal making and all that. Tell us a little bit about what's on your mind when I say NVIDIA to you.
Yeah, so thanks for having me, Nicole. And I'd say, you're absolutely right. You look at a couple of weeks ago, NVIDIA was definitely left for dead. You look today, over the last 2 to 3 weeks, I'd say the overall outlook for NVIDIA has significantly improved. And the biggest reason for that is just based on what we've seen on the policy side of things, right? And Saudi Arabia, just what we kind of saw here over the last day or two, is a big part of that. But if you just kind of take a step back here, just for a second, over the last 2 weeks or so, I'd say it really started with Q1 earnings season from a number of the hyperscalers. All of them pretty much reconfirmed 2025 CapEx expectations, where even some of the likes like Microsoft hinted towards higher capital spending into 2026. So that improved the visibility going into next year, which was a big concern for the street. You then kind of move over to the last couple of days with the US-China trade deal, obviously a good thing for hardware and the broader chip space. And more recently here with the Saudi Arabia news, that's a big deal in the sense that there was, we just saw the administration scrap the AI diffusion rules. And, I think there might have been concerns on how the administration would have handled NVIDIA on a country-by-country basis. But now it looks like they're going to use NVIDIA as this kind of bargaining chip, as well as AMD. And it makes all the sense in the world, because the most valuable IP that we have in this country is probably NVIDIA's GPU. So you can now kind of go country by country and almost think about the potential for NVIDIA to be included in more and more deals out there. And that, leads to higher sovereign AI revenue. I'd also say when you start thinking about China, even more specifically, where they were just locked out of because of the H20, it's interesting because now there's the potential for the US and China to come back to trade talks in the next couple of weeks. And then you have to also imagine and potentially consider, does NVIDIA have access to potentially get back into the China market, which we think is possible. So I think all of that maybe is slowly starting to get priced into this market, but we see more upside just based on a lot of that stuff that we just mentioned.
So it's a great bargaining chip. I mean, you explained it so well here. And with Saudi Arabia, you had those sort of the hurdles in the Biden era rolled back. Now we'll be able to have NVIDIA chips supplying processors to Saudi Arabia, the United Arab Emirates, and it sets the tone because they have this joint conference that they had and make this deal. And it's sort of like without NVIDIA, they're looking for it. And so by saying and lifting some of those restrictions, it opens up to so much more. In fact, now we have Saudi Arabia doing a $600 billion investment package. I think that's going to be in the U.S. So that's also, they're talking about the analyst estimates being $15 billion to $20 billion in revenue with deals like this that are happening. So it's good for our American companies, and we get U.S. investments.
Yeah. I mean, that's absolutely right. And on top of all this on the semiconductor side of things, right? I think what's really interesting is that the administration has this kind of pending 232 semiconductor investigation, which we still need to wait on and see what the actual outcome is on top of that in terms of the tariffs. But the whole goal here, right, is to have more and more of these chips basically built in the U.S. Maybe not all of it. And definitely not all of it, but if you can get some more of it built in the U.S., specifically some of these GPUs, NVIDIA's GPUs, and then maybe ship them out to regions like Saudi Arabia, you're talking about jobs being built here in the U.S., and you're talking about overall higher revenue for a company like NVIDIA, and potentially ways for them to circumvent a lot of these potential tariffs that get embedded from this 232 semiconductor investigation. So there are ties to all these moving parts that are out there right now. But ultimately, yes, I mean, the Saudi Arabia news is definitely a positive for NVIDIA and AMD. They're going to see, higher revenue. It's not going to be game changing in nature, but again, it's one piece towards potentially a bigger domino effect that we see here over the next couple of months and years for both of those companies.
NVIDIA's market capitalization has risen above $3 trillion once more thanks to a significant recovery. Perhaps more than any other firm, NVIDIA is well positioned to become the first to exceed a $4 trillion market cap. However, due to economic uncertainties, it is questionable when NVIDIA will reach that milestone. In June 2024, NVIDIA's market value surpassed $3 trillion. Before a sharp sell-off this year, the massive GPU manufacturer stayed over the barrier for the most of the following 8 months. NVIDIA has joined Apple and Microsoft in the $3 trillion club, though. By 2026, could it potentially surpass the first $4 trillion stock? What actions did NVIDIA take to recover? Nothing by itself. We must first comprehend the reasons for the stock's initial decline in order to comprehend its recovery. Strict trade restrictions imposed by the Trump administration on H20 GPU exports to China were a major offender for NVIDIA. As a result, NVIDIA declared that it would incur a $5.5 billion write-down in the first quarter of 2025. Like many other stocks, NVIDIA's share price has been significantly impacted by the White House's tariffs. Investors were particularly alarmed by China's retaliatory tariffs on U.S. goods and its exceptionally high duties on imports from China. It makes sense that more positive news on the trade front contributed to a recovery given the circumstances that caused NVIDIA's stock to decline. The Trump administration's early indications in recent weeks that Chinese tariffs would be reduced were beneficial. There was additional cause for confidence with the recent 90-day halt on certain of the tariffs. Microsoft is closest to the $4 trillion mark, while NVIDIA is once again in the $3 trillion club and has already surpassed Apple's market capitalization. However, is it possible for NVIDIA to surpass Microsoft and maintain its lead over Apple? It's really likely. The price of Microsoft's stock is about 30 times its projected earnings. The projected earnings multiple for Apple is about 27. With shares trading at 26.9 times forward earnings, NVIDIA is just a hair behind. If everything else is equal, NVIDIA may have more leeway than Microsoft and roughly the same amount as Apple thanks to its lower valuation. But not all of these tech behemoths have the same growth prospects. According to Wall Street, NVIDIA's profits should increase by about 47% this fiscal year and 29% the following year. By comparison, experts predict for Apple's earnings to increase 18% this year and 9% next year, with Microsoft forecasting earnings growth of roughly 14% this year and almost 13% next year. Compared to Apple and Microsoft, I believe NVIDIA is better positioned to become the first $4 trillion stock. Amazon and Alphabet, the parent company of Google, are also competitors, but I consider them to be dark horses in the race. However, I am less certain about the timing of NVIDIA's potential to reach a $4 trillion market cap by 2026. Although investors are understandably thrilled about the diminished threat of a full-scale trade war between the US and China, it appears likely that significant tariffs will still be imposed, which could still somewhat hinder the company's operations. Additionally, a potential economic slowdown brought on by the tariffs may cause some businesses to reduce their investments in artificial intelligence, AI, which could have a negative impact on the growth of data centers. To reach $4 trillion, NVIDIA's market value would have to increase by about 25%. I believe that within the next 18 months, this level of growth might be achieved. However, a number of factors could make it more difficult to accomplish the goal in such a short period of time. NVIDIA will be the first $4 trillion stock, in my opinion, but I won't say when it will do so. So what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Positive week for investors with the S&P 500 higher. Fifth positive day, longest daily win streak since May 2nd. Tech and discretionary are among the top S&P 500 sector winners week to date. The Nasdaq is also higher by 7%, but let's break all of this down with Unlimited CEO and CIO Bob Elliott and Truist Wealth Co-Chief Investment Officer Keith Lerner. Great to have you both here. Keith, I'm going to start with you because this really is a stock market that feels like it's continuing to trade on the optimism around trade tailwinds. But you say that the biggest story in your view isn't the uncertainty we've seen here. Instead, it's what we're seeing in tech. Why?
Yeah, well, great to be with you. I mean, it was a big story to see the de-escalation, right, of tariffs, because all of a sudden the market was pricing in a 60% chance of recession. Now you've brought that down to maybe 1 in 3, and the market's repriced up. But I do think a big story that kind of got pushed aside during all this tariff uncertainty is the AI theme. Remember, the big theme of this bull market that we were all talking about last year and early this year is AI. And what we saw during this earnings season is that tech spending remains very healthy, and that even if the economy slows down, you're likely to see that tech spend continue. And if you look at tech earnings, those forward earning estimates continue to move higher, and they account, tech and communications accounts for about 40% of the overall market. So I think that story is reemerging as we move past some of this tariff uncertainty.
Bob, what's the bond market telling us? We've been talking about bond vigilantes. There's been a lot of focus this week on this reconciliation bill, which didn't make its way through the House in the first attempt, but is certainly back in focus as we go into the weekend and next.
Well, I think the big question coming into the administration as a whole, and really over the course of the last couple of weeks, has been whether the administration would pursue a fiscal set of policies that were going to be tight and lead to negative growth impacts, whether it be through tariffs or through implementing a fair number of pay-fors for the TCJA extension. And I think we've seen a lot of information in the course of the last week that has shown that the administration is pretty committed to pursuing much more expansionary policy ahead. You're looking at a deficit based upon the bill that's currently trying to get out of committee that would expand the U.S. government deficit by 1.5% of GDP in the next year. That's quite expansionary. And then on top of it, we've basically gone from a place where tariffs would be a 1.5% to 2% drag on the economy ahead to one in which there's going to probably be some modest challenges as a result of it. And so that's a pretty radical set of policy changes from contractionary to much more stimulative. It's happened over the last week, and probably, if anything, the bond market isn't reflecting the magnitude of that shift with its move so far.
As China hawks become more worried that the projects are endangering U.S. economic and national security, President Donald Trump's rush of artificial intelligence agreements on his Middle East tour is creating a rift within his own government. While shipments to the United Arab Emirates may exceed 1 million accelerators, primarily for projects involving or owned by U.S. companies, the Trump team has negotiated deals for parties in Saudi Arabia to purchase tens of thousands of semiconductors from NVIDIA Corp. and Advanced Micro Devices, Inc. These chips are the most sought-after technology of the AI era and are used to create and train models that can replicate human intelligence. According to persons aware with the situation, some senior administration officials are trying to stall the transactions because they believe the U.S. hasn't put in place enough safeguards to stop American chips sent to the Gulf from eventually helping China, which has close ties to the area. According to the persons, these authorities contend that too many specifics are still pending and that the agreements shouldn't be made public without legally binding clauses, even though the UAE and Saudi agreements contain high-level wording prohibiting Chinese companies from obtaining such chips. The readiness of White House AI advisor David Sachs, who is assisting in facilitating the negotiations, to consider recommendations from Gulf leaders that they perceive as obvious threats to national security, has also disturbed China hawks. The existing bilateral agreements in the Middle East do not contain any of those recommendations. Beyond those security concerns, several top Trump officials questioned whether it was prudent to export that many chips to any country outside of the U.S., according to the sources, considering the administration's emphasis on preserving American leadership in AI. At an AI event in Paris in February, Vice President J.D. Vance stated that the Trump administration will make sure that the most potent AI systems are constructed in the United States using chips that are conceived and made in the United States. The U.S. would still control the great bulk of the world's computing power if all of the disclosed and anticipated Middle East agreements materialize, but Gulf nations would for the first time have sizable capacities fueled by top-tier U.S. gear. This video, which is based on conversations with around a dozen people who spoke about internal administration deliberations on condition of anonymity, was not officially commented on by a White House representative. Requests for response from Sachs, AMD, and the Saudi government were not answered, and NVIDIA and a UAE representative declined to comment. Sachs and other proponents of the agreements contend that nations with aspirations for artificial intelligence may eventually look to Chinese companies for alternatives, as they have made strides in catching up to industry leader NVIDIA, if the U.S. does not push the globe to utilize American processors. Sachs stated on stage with Saudi Arabia's Minister of Communications and Information Technology on Tuesday that we need our friends, like as the Kingdom of Saudi Arabia and other important partners and allies, to want to build on our technologies. According to him, a friend like Saudi Arabia is completely unconcerned with the risk of that technology ending up in China. There are disagreements within the Trump administration. According to the persons, in increasingly heated discussions over the last 2 days, a number of senior officials have talked about ways to slow down the implementation of the Gulf AI agreements and put a stop to initiatives that haven't been revealed yet. One issue is a bilateral agreement between the United States and the United Arab Emirates that would involve a large-scale effort by OpenAI, the company that invented ChatGPT. Following visits to Saudi Arabia and Qatar earlier this week, Trump landed in Abu Dhabi on Thursday. According to those with knowledge of the situation, officials on the ground were still engaged in active discussions the morning of the president's visit. They also stated that they anticipate the transactions to proceed soon. China hawks might use the regulatory procedure in Washington to voice their worries if that occurs. All shipments of AI chips to the Gulf must be approved by the U.S. government via a licensing procedure that involves multiple federal agencies. After rejecting a framework proposed by President Joe Biden, administration officials are currently working on global semiconductor export control regulations. That offers yet another chance to incorporate other strategic aims and particular China guardrails. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now, let's dive into today's video.